you're a sports car business owner who doesn't understand why you paid so much tax last year and you want to figure out how you can pay less and understand how it all works, this video is for you. I'm Jonny Petrucco, an IRS enrolled agent, and I'm here trying to help everyone in the hobby pay less taxes. I've learned some secrets, and unfortunately, there's all kinds of taxes: sales tax, income tax, payroll tax. It's unfortunate, but this is the reality that we have. And so now we need to figure out how to pay less taxes. And today I want to walk through personal income tax. Now, for some people, this can be pretty boring. I'm going to share my screen and go through the 1040 federal income tax return. So if you just want to leave that to your tax guy and trust someone that can help you save on those taxes and explain it to you in an elementary way, you might not be interested in this part. I'm going to explain it in a simplified way. Feel free to reach out to me if you want me to just directly take care of this for you and I can explain how it works. But maybe you're someone that does it yourself. It's really cool to meet ones that they tackle this on their own using TurboTax or something like that. If you're using a third-party app like TurboTax to file your taxes, you're going through a questionnaire. And at the end of putting all the information in, they tell you, hey, this is what you owe or this is your refund. But behind the scenes, they are filling out actual tax forms. And I'm going to share that in a moment. And as I walk through it, I think it'll help you to understand how it all works and how it ties together so that you can make more informed decisions and be better at planning and saving on your taxes. So let's get in. Okay, I'm on irs.gov, and for simplicity, we're going through the federal income tax return. I live in Florida. We don't have a state income tax. Unfortunately, many places do, and that's a whole separate return to be filed. But for federal taxes, you can generally choose to file as single or married, and there's head of household and a few others, but those are the main ones. And depending on what you choose, you have your tax brackets. So what does this mean? 10%, 12%. In our example, we're going to go into our tax return, and this guy made $750,000 in sales with $150,000 profit. So you see, 37% bracket. What it does not mean is, since he's 750,000 sales, he does not pay tax on the sales. He's going to pay it on the profit that's deducted from your sales. So this is going to fall into the 24% percentile if he's single. And does that mean 24% times 150,000 profit is his tax? No, that's a flat tax. This is a progressive tax bracket. So we have the first 11,600 is taxed at 10%, and then the next batch is at 12%. And that's what this little diagram is showing us here. And so it increments. And so there's some tax planning, right, to get the next dollar earned out of the 22% bracket and bring it to the 12%. But for this purpose, I'm going to jump now to the 1040. This is personal tax return. And we have Joe Schmo. What you see here, all of this information that's being put in, he's married and he lives here in Gainesville. That's where I live. Social security numbers, right? Married, filing jointly. And then he's got 2 children here. He did dispose of digital assets and trade and sell. They are eligible for the child tax credit. So all of this information is going to be requested on your questionnaire when you go through TurboTax or something like that. And then they'll begin to ask you about your income. All right, so right here we have the W-2 income. Now, in our case with Joe, we are assuming, for one, his wife is stay-at-home, and for two, he has an S corporation. So as an S corp, you're paying yourself a reasonable salary. In this case, we're saying it's $50,000. His total profit for the business was $150,000. So in this case, down here, I'll explain later. Schedule 1, this is the S corporation profit. $100,000 distribution. Even if he doesn't take the distribution, you still are paying tax on that profit. And then the $50,000 compensation for salary. Now, this is a little aggressive when you talk about what's reasonable compensation and what the split is. If you're 50-50, if it was like $75,000 salary and $75,000 profit distribution, it's a little safer, but actually this is still quite reasonable and generally should be okay. But moving down, in this case, he doesn't have this other kind of income. Maybe you do, depending on your situation. Interest, dividends, Social Security benefits if you're retired. So next we have Schedule D. This is your capital gain and losses. Actually, if you're a collector and investor, this is where you report your sale of collectibles. But in this case, we're looking at stocks. So let's say Joe had a bad year and he made a loss of, say, $5,000. Well, you have a limit of $3,000 that you can deduct from your W-2 and your S corporation profit. All right, that's just this kind of example. So when you add up 50, -3, 100, your total income is 147,000. In this case, we don't have adjustments on Schedule 1. If you were a sole proprietor with Schedule C, you would have your self-employment tax, your health insurance, that will come off here. But this tax return is 2 pages, right? It's 2 pages long, but there's over 100 corresponding schedules and forms. And it's a big maze because on Schedule 1, there is many lines, right? And then it links Schedule E is for the S corporation return. So it's a big tavern and a big maze going through these returns. So it's good to keep it to an expert who knows how it all works together. But next we have the adjusted gross income, which is 147 still. And so now there's 2 kinds of deductions that's important to get us to our taxable income. Now remember, back there for our tax brackets, you're not paying tax on total income or adjusted gross income, it's taxable income. So let's see how we get to there. First is the standard deduction or itemized deduction. And since Trump in 2018, the standard deduction is a lot higher. So less people are itemizing, which is your charitable giving, your mortgage interest, medical expenses, and so on. But with single, it's almost 15,000, and married filing jointly, it's almost 30. So we're going to do a standard deduction here, and then qualified business income deduction. This is really nice. When the C corporation tax rate went down to 21%, that's a flat tax rate, different than the personal income taxes. They also gave a relief for small business owners, sole proprietors, S corporations, and that relief is a 20% deduction of business profit. So this is where we get this from. We have 20% of the $100,000 profit from the S corporation is a deduction. So our total deductions after adjusted gross income is 29 plus 20, so 49,000, and you subtract 147 minus 49 taxable income. Okay, so if you're still here with me, there's a lot here, but this is how we flow to our taxable income. And next we have, what is our tax owed? So this is our time to square up with the government. So we have, here's what is owed, and then here's how much we paid, and the difference will be a refund or will be further amount due. In order to get this number here, we need to use the tax table. So we have our taxable income, 97,800, and we're gonna go jump over here. This is a tax table fund. So I'm looking at this column, married filing jointly, it'll be this number, and then taxable income, not adjusted gross income. We're gonna scroll way down to get to 97,800. And then if you're over 100,000, you have to do the calculation back on the screen. You just kind of calculate each bracket. But in this case, it's already pre-calculated for us. It was 97,800. So it's right in here, and that's our tax, 11,628. That's what's owed. So we put that here, and then there's some other ones, but finally we get a break. Child tax credit. So they have 2 children, and they are under the threshold of 400,000. So they get the full benefit, $2,000 per child. So that's gonna 1 for 1. It's a credit, which is $1 direct write-off for taxes versus a deduction up here. That's before taxable income. So it's not 1 for 1. The credits are amazing. 11,628 minus 4,000. This now, right, is our total tax. Okay, 7,628. So do we get a refund? This section now is payments. On our W-2, we're saying we had a federal withholding of $5,000. And there's some tax strategies here we could do. We can do at the end of the year by increasing your withholding if we kind of have an estimate of what our tax bill will be. But otherwise, normally you have estimated tax payments. So every quarter, a business owner is supposed to remit an estimated tax if it's not being withdrawn from their W-2. And this business owner put in $1,000 each quarter. So $5K from his W-2, $4K from his estimated tax payments. And again, strategy-wise, you could maybe save cash flow and do this at the end of the year. And just maybe you could have changed this all to something at the end of the year and made that just 0. But nevertheless, he paid $9,000. He actually owed $7,628. So our final calculation is you overpaid 1.372, and that's your refund. Okay, then you, on your tax software, you fill in your routing number and account number, and then you get your refund within a week usually. Okay, I'm curious what you all think about that. I could go through more forms. I'm thinking about going through the Schedule C next, but this is a overall start. Let me know if you have any questions. And at Sports Card Tax Guy, we are helping our clients trade their IRS stress for financial success. Talk soon, and let me know if you have any questions.